What's going on, ladies and gentlemen? Welcome back to another video. Thank you guys once again for tuning in. If you're not familiar, Qualcomm exploded today after Apple and Qualcomm have settled their beef and have settled the litigation against each other and basically just dropped it. So let me go and share the screen. Here's Qualcomm. After the news broke today, the stock rocketed from 58 to 74. The stock literally went to the moon. Now, you don't hear me say stocks go to the moon because I'm not a pumper and I don't lie to people about saying stocks are going to go to the moon unless they actually plan to go to the moon or they have gone to the moon. And this is one of those stocks that actually went to the moon and it's staying there right now. So, what you guys need to know if you're not familiar, and I'm going to read this off to you because there's no way that I'll be able to say it efficiently and give you all the details without screwing up somewhere along the line. So let me just read this off to you guys so you understand. So how did this whole thing all begin? In about 2011, Apple sold iPhones with Qualcomm chips inside that powered the device's connection to cellular networks. For years, Qualcomm was the exclusive chip provider for Apple, but then things got messy. So what is the issue? In addition to the actual paying for Qualcomm's chips, Apple has to pay a licensing fee for the intellectual property that enables the smartphones to connect to the internet through baseband processor. Because Qualcomm is the exclusive holder of the patents, Apple is allegedly anti-competitive practices. So let's continue further. As a part of the agreement for Apple to exclusively use Qualcomm's chips between 2013 and 2016, Qualcomm agreed to pay Apple $1 billion in rebates annually. Part of this agreement included Apple not cooperating with regulators and not working with other chip makers. Here's where things kind of get spicy. As Apple improved and raised the prices of the iPhone, Apple reportedly became frustrated with the slice of the pie that Qualcomm was demanding, arguing that Qualcomm was riding basically the wave of Apple's success and Apple's innovation. So somewhere along the lines, Apple gets mad that Qualcomm's basically making so much money off the fact that Apple has become super innovative with their phones and they're selling so much phones, and basically Qualcomm's just making a boatload of money off of Apple. So you can see how things start to escalate. Apple doesn't like it. They start fighting back. They're going and working with Intel now, right? Using Intel's chips in their phones, and that breaches the contract and the agreement that Apple had with Qualcomm, and now Qualcomm's not getting the money they should be getting from Apple, and now Apple doesn't want to pay Qualcomm. So you can basically see this is just a bunch of back and forth of saying, hey, you owe me money. No, we don't want to pay you money. This agreement sucks. We don't want this agreement. It's basically just business gone wrong. Which then, of course, leads to the court systems where, of course, the court system thinks they can figure out everybody's problems and get it all worked out with lawyers. And yeah, exactly. It gets really, really messy. So for a couple years now, Qualcomm and Apple have been going back and forth in court, trying to figure out who's going to pay this much money, who's going to pay that much money, how are we going to get out of these deals, how are we going to get out of the contracts, etc. And just today, the news breaks that Apple and Qualcomm are dropping all the litigation and everything that has to do with this business gone wrong. And since then, Qualcomm stock has basically exploded. So this is the reason I'm coming out with this video, is because this is legitimately a stock that has gone to the moon, okay? When you guys go to StockTwits and you hear other people talking about stocks going to the moon, half the time the stock's going to go up 20 cents and it's going to drop. But this stock literally went to the moon and it's staying there as of right now. So what we're going to be doing here in the coming days is definitely following it. When you see a stock explode that much, it's usually hype, okay? There's a lot of hype, there's a lot of momentum and excitement that this litigation has ended and now the stock is squeezing like crazy, but the likelihood that it continues to do this is not going to happen. See, it's like a gunshot, right? You shoot a gun, the bullet's going to go out really, really fast, and then over time, it's going to fade out and the momentum will die and that bullet will drop. So what we're going to be doing here in the coming days is following Qualcomm for a short play, and we highly suggest any of you out there that watch this video and that are, pretty adverse traders that know how to short stocks, can short stocks, to follow Qualcomm for a short play, as it literally went to the moon, and shortly after, the astronauts are going to leave the moon and come back to Earth to hang out, okay? So we should see this come down in the near-term future. What we do know is that the stock is up near a 52-week high. As you get up towards the 52-week highs, you're going to hear in the news, oh, look at this, stock is doing great. It's at or near all-time highs, which basically means sell. right? And then when everybody says, oh, the stock is trading terrible, it's at 52-week lows, the lowest it's ever, that's usually a buy. So you have to use reverse psychology of what primarily the whole market's going to be telling you. So there's two ways to look at this. Is it going to come down right away? No, it's not, because there are going to be people that feel that this is a great buy now that this has all ended. Whereas traders like myself go, okay, this is some overhyped news. It's good news, but the play has been overhyped, and this should kind of settle. The dust will settle, the hype will settle, and we should start seeing this come down in the near-term future within the next week, 2 weeks. So granted, though the big move happened to the upside, there's still a good amount of money to make to the downside. So if you're not one for trying to jump in and ride all the hype, then you can be a little bit more patient and wait for the backside move if you can short. So I just want to come out and make this video explain exactly kind of what happened between Qualcomm, what happened between Apple, what you can expect in the coming days and in the coming weeks is that this will probably have some good rallies here in the coming days, but nonetheless, we'll probably see this fall into a short play not too long from now. So do remember we are getting close to the all-time high mark resistance where we've had big sell-offs, and now that we've reached these levels, you've basically been bought up into resistance or a seller zone. So when you take a step back, what you have to tell yourself is down here in the low points of 49, this is now the demand zone, and up here is the sell zone. Demand, supply. Demand, supply. And another thing you guys have to look at, right? When you guys think of resistance or you think of a sell zone or demand zone, think about it this way. Imagine if you bought Qualcomm back when it was $71 and you never sold and it tanked and it tanked and it tanked. And don't say, yeah, well, they should have cut their losses. Well, what if someone was going for long-term investing and never cut their losses? Granted, yeah, maybe someone should have cut their losses. Maybe they should have been out of the trade. Maybe they should have known what they were investing in before they invest in it. Yeah, all the what ifs. But what we don't have to guess about is what they're going to do. See, the reason resistance is created is for a couple of things. People that are technical traders like ourselves and people who are bag holders. Bag holders being someone who has held the stock for a long time. Imagine if you bought Qualcomm when it was $72 and you held through all this pain. And then you woke up today, you got home from work and go, oh my God, Qualcomm's up to $70. And you've been negative 5 grand, 10 grand, 20 grand, 12 grand, however many grands for the past year. And you woke up today, or you got home from work today and you see Qualcomm's up at $70, the first thing you're probably going to do is wait for it to get back up to your break-even price, maybe a little bit of profit, and you're going to dump it because you are sick and tired of holding this stock. You don't want it anymore. You've held it at a loss for over a year. Granted, it could go higher, but you're just ready to be done with it, okay? That is where a lot of people are at that bag held this stock. They're like, you know what, I've had this for a year, I bought it up towards 70, even maybe at 60, and it kept tanking, and now I'm just ready to be done with it. And that's the mentality that a lot of traders are going to be having on this stock. And then secondly, let's say you were holding Qualcomm for over a year, and now it's up back at 70, and you see this really big explosive move. But not only that, right? Let me actually grab my drawing tool so we can have a little bit more fun with this. Share screen, boom, boom, here we go, and there we are. So in another thing, right, imagine if you were bag holding the stock for over a year. What you would have learned over that whole time you were bag holding the stock is that it goes down, and it'll come up, it'll go back down, it'll go back up, it'll come down, it'll go up here, it'll go down here, up there, back up here, up, down, 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 up, down, oh, big up. You're most likely thinking back down because that's the natural flow of stocks. If you were a bag holder over the past year, you would have been in the downs, you would have been in the ups, you would have been in the downs and the ups, and what you would have learned from holding that whole time is that stocks don't just go up forever, stocks just don't go down forever. They move up, they go sideways, they go all around, they even do backflips and circles. So as the bag holder in the stock coming up into the sell zone, you're going to go, holy cow, this thing just went on an absolute rip. What is the likelihood that it keeps going without coming back down? And how do I know that it's not going to keep going down after it just went up? And how long is it going to go down for before it comes back up? Do I really want to hold and risk and see if we can get it up into a profit? Or am I just going to get out and be happy that I'm at break even? You're going to be happy that you're at the break even and you're getting ready to get out. And that is exactly why resistance is created on many stocks. Portion of technical traders going, this is overextended, it's time to sell the stock. Portion of technical traders that bought today, got it up into a good sell point, they're ready to sell. And a portion of people that have been bag holding a stock that are now break even, they're ready to get out and just be done with the stock. And that is exactly how resistance is created. So what you guys need to know is that going into these next couple days, there's going to be a lot of people, even myself. I mean, look at me, I'm hyping the stock up right now just by making this YouTube video. People are going to see it and they're going to, holy cow, look at this thing. But I'm not the one to say buy this, right? I'm the one to say actually do the opposite. You should watch it short term, long, but then watch it short, right? Because we know we're coming up into a sell zone. We know people have been bag holding the stock. I'm even saying that I want to sell it short, right? There's a lot of this going on. So I hope you guys liked the video. Hope you learned something new today. Just want to come out, make a quick video before I end it working for the night. So again, thanks for tuning in. Like the video, share it, subscribe it, whatever you got to do to make sure that you don't miss out on the next video. And thank you again for tuning in.